Assets over Image, written and published by Rich Audiobooks. Throughout history, the world's wealthiest families have understood a fundamental truth that remains relevant today. Land is the foundation of enduring wealth. While fashion trends come and go and luxury cars depreciate the moment they leave the dealership, land has consistently appreciated over time, creating generational prosperity for those who recognize its value. Consider the stark contrast between two investments: a $50,000 0-cents luxury watch and a $50,000 0-cents plot of undeveloped land in a growing area. The watch, despite its prestigious brand name and initial social cachet, begins losing value immediately. Its status signaling power diminishes as newer models emerge, and its resale value rarely matches the price. The land, however, quietly appreciates as population growth drives demand, infrastructure develops around it, and its finite nature becomes increasingly apparent in our expanding world. Lesson 1. Land appreciates, status fades. The wealthy understand that land ownership offers multiple paths to wealth creation. Beyond simple appreciation, land can generate rental income, provide tax advantages, and serve as collateral for other investments. It can be developed, subdivided, or held as a long-term store of value. Perhaps most importantly, land ownership offers protection against inflation, a hedge that status symbols can never provide. This principle extends beyond raw land to real estate in general. While others chase the latest trends or compete for social media attention with luxury purchases, the wealthy quietly accumulate properties in strategic locations. They recognize that a well-maintained apartment building generating monthly rental income will continue producing wealth long after the latest designer handbag has been forgotten. The psychology behind this choice reveals a fundamental difference in wealth-building mindsets. Those focused on status often seek immediate gratification and social validation through visible displays of consumption. The wealthy, by contrast, embrace the patience required for land investment. They understand that real wealth often grows invisibly, away from public attention and acclaim. History provides countless examples of this principle in action. Many of America's founding fortunes were built on strategic land acquisition. European aristocratic wealth has been preserved through centuries of political upheaval, largely through land holdings. Even in today's digital age, tech billionaires frequently invest significant portions of their wealth in land and real estate, recognizing its enduring value. The modern twist on this ancient wisdom involves identifying emerging opportunities in land investment. While traditional urban and suburban real estate remains valuable, the wealthy are increasingly looking at opportunities in agricultural land, renewable energy sites, and locations poised for development as remote work reshapes population patterns. They recognize that land's value isn't just in its current use, but in its potential for future adaptation. Yet perhaps the most powerful aspect of land investment is its ability to transcend generations. While status symbols lose their luster and become outdated, well-chosen land holdings can appreciate for decades, creating a legacy of wealth that can be passed down to children and grandchildren. This multi-generational perspective is a hallmark of truly wealthy thinking, focusing on assets that appreciate rather than depreciate over time. In today's social media-driven world, the temptation to invest in image and status has never been stronger. Influencers showcase luxury lifestyles, creating the illusion that wealth is about what you can display rather than what you own. The wealthy recognize this distraction for what it is and maintain their focus on assets that appreciate over time. They understand that true wealth isn't about what you can show off today, it's about what you can build for tomorrow. The lesson is clear. While status symbols may fade, land endures. The choice between investing in appreciating assets versus depreciating status symbols often marks the difference between building lasting wealth and maintaining the appearance of wealth. As you begin your wealth-building journey, consider whether your investments will appreciate like land or fade like status. Lesson 2. Businesses beat branded bags. The allure of luxury items has never been stronger than in our social media-driven world. Every day, millions scroll past images of designer handbags, expensive watches, and the latest fashion must-haves. Yet while many drain their bank accounts chasing these symbols of success, the wealthy are quietly building and acquiring businesses that generate consistent cash flow. Consider this stark contrast. A premium designer bag might cost $3,000, 0 cents, and begin depreciating the moment it leaves the store. That same $3,000 0 cents invested in starting a small online business could generate recurring revenue for years to come. The wealthy understand this fundamental difference between assets that take money out of your pocket versus those that put money in. Business ownership represents one of the most powerful wealth-building tools available to anyone willing to learn and take action. When you own a business, you're not just buying yourself a job, you're creating a system that can work for you around the clock. Whether it's a small e-commerce store, a service-based business, or a traditional brick-and-mortar establishment, businesses have the unique ability to scale beyond your personal time investment. The wealthy approach business acquisition and creation with a methodical mindset. They look for opportunities where they can leverage systems, people, and technology to create value in the marketplace. They understand that a well-run business can provide multiple streams of income, profits from operations, tax advantages, asset appreciation, and eventually a significant payday if they choose to sell. Many first-generation millionaires built their wealth through seemingly boring businesses: laundromats, storage facilities, cleaning services, or wholesale distribution. These enterprises might not garner Instagram likes or YouTube views, but they solve real problems and fulfill genuine market needs. While others chase trendy business models that look good on social media, the wealthy focus on businesses with proven revenue models and strong cash flow potential. The psychology behind luxury purchases often reveals a desire for instant gratification and social validation. A designer bag might bring temporary satisfaction and a few compliments, but it won't put money in your bank account each month. Business ownership, on the other hand, requires delayed gratification but offers the potential for lasting financial rewards. It's the difference between consuming wealth and creating it. Smart business owners understand the concept of productive assets, investments that generate positive cash flow and appreciate over time. They reinvest their profits into growth opportunities rather than depleting their resources on depreciating luxury items. This compound effect of reinvestment can transform a modest business into a significant wealth-building engine over time. The digital age has democratized business ownership like never before. With minimal capital, anyone can start an online business, create digital products, or offer services globally. The wealthy recognize these opportunities and often maintain a portfolio of traditional and digital businesses, diversifying their income streams while minimizing risk. The true power of business ownership lies in its ability to create multiple layers of value. Beyond immediate profits, businesses build equity, develop intellectual property, create tax advantages, and establish valuable customer relationships. These assets compound over time, creating a foundation for lasting wealth that no luxury purchase can match. As you scroll past the next social media post showcasing the latest status symbol, remember that true wealth builders are focused on acquiring and growing businesses. They understand that while branded bags may impress others momentarily, businesses can generate wealth for generations. The choice between projecting success and building actual wealth becomes clear when you adopt this perspective. Businesses beat branded bags every time. Lesson 3: Stocks over stories. The world of investing is awash with compelling narratives, dramatic headlines, and emotional appeals that mask the fundamental truth about building wealth through the stock market. While the masses chase the latest hot stock tip or invest based on social media hype, the wealthy take a drastically different approach to equity ownership. The wealthy understand that stocks represent partial ownership in real businesses, not just ticker symbols on a screen. They view themselves as business owners rather than traders, focusing on companies with strong fundamentals, proven business models, and sustainable competitive advantages. This ownership mindset leads them to think in decades rather than days, allowing them to benefit from the compounding effect of both capital appreciation and dividend growth. Consider how the average investor behaves during market volatility. They often panic, sell at the first sign of trouble, driven by fear-inducing headlines and dramatic market commentary. The wealthy, however, see market downturns as opportunities to acquire more ownership in quality businesses at discounted prices. They understand that stock prices may fluctuate wildly in the short term, but company value tends to grow steadily over time if the underlying business fundamentals remain strong. The attraction to storytelling in the investment world is particularly dangerous because humans are naturally drawn to narratives. We want to believe in the next big thing, the disruptive technology, or the charismatic CEO who promises to revolutionize an industry. But the wealthy investor knows that for every Amazon or Apple, there are countless companies with compelling stories that ultimately fail to deliver shareholder value. They focus instead on measurable metrics: cash flow, profit margins, return on invested capital, and competitive positioning. Dividend investing represents another stark contrast between the wealthy and the average investor. While many chase capital gains through speculative growth stocks, the wealthy often build substantial dividend portfolios that generate consistent passive income. They understand that dividends, especially from companies with long histories of dividend growth, provide a reliable stream of income that can compound over time. This approach aligns with their preference for predictable, sustainable wealth creation over the excitement of potential overnight riches. The wealthy also approach diversification differently. Rather than spreading investments thin across dozens of stocks they barely understand, they often concentrate their holdings in sectors and companies they know well. Warren Buffett famously advised that diversification is protection against ignorance. The wealthy prefer to develop deep knowledge in specific areas and invest accordingly. This focused approach allows them to better understand their investments and make more informed decisions during market turbulence. Technology has democratized stock market access, but it has also amplified the noise that can lead investors astray. The wealthy maintain their edge by filtering out the daily market chatter and focusing on fundamental business analysis. They read annual reports rather than tweets, study industry trends rather than technical charts, and make decisions based on long-term business prospects rather than short-term market movements. Portfolio rebalancing for the wealthy is typically done with careful consideration rather than reactive emotion. They understand that successful investing often requires doing nothing for long periods, allowing their ownership stakes to compound in value. This patience stands in stark contrast to the frequent trading and portfolio churning that characterize many retail investors' approach to the market. The wealthy also recognize that stock market investing is just one component of a broader wealth-building strategy. They integrate their equity investments with other assets like real estate and private businesses, creating multiple streams of income and growth. This holistic approach to wealth creation helps them maintain perspective during market volatility and avoid making emotional decisions based on short-term market movements. The wealthy's approach to stock market investing reflects their broader philosophy toward wealth creation. They prioritize ownership of productive assets over speculation, sustainable growth over quick profits, and fundamental analysis over market narratives. By focusing on these principles rather than chasing the latest investment story, they build lasting wealth through the power of equity ownership. Lesson 4. Networks over followers. In today's digital age, we've confused popularity with prosperity. While millions chase fleeting social media fame, the truly wealthy focus on building something far more valuable: genuine, strategic relationships that create lasting opportunities and compound return. The distinction between followers and a true network lies in the depth of engagement and mutual value creation. A follower might double-tap your photos or leave encouraging comments, but a strong network contact might call you about an off-market real estate deal or introduce you to your next business partner. While social metrics can stroke the ego, they rarely translate into tangible wealth-building opportunities. Wealthy people understand that real networking isn't about collecting business cards or LinkedIn connections. It's about cultivating relationships with purpose and intention. They seek out people who complement their skills, challenge their thinking, and open doors to new opportunities. These relationships often start in unexpected places: industry conferences, volunteer boards, mastermind groups, or even recreational clubs where successful people tend to gather. The wealthy approach relationship building with a long-term mindset. They focus on giving value first, often spending years nurturing connections before any direct benefit materializes. This patient approach stands in stark contrast to the transactional networking prevalent on social media, where the emphasis is on quick wins and immediate gratification. Consider how the wealthy leverage their networks. When they need capital for a new venture, they don't broadcast a plea to anonymous followers. They reach out to trusted contacts who understand their track record and capabilities. When seeking advice, they can call upon experts who know their situation intimately, rather than relying on generic online guidance. These relationships become a form of social capital that appreciates over time, much like any other valuable asset. The power of these networks often manifests in exclusive opportunities. Private investment deals, off-market real estate offerings, and early-stage business partnerships typically flow through established relationship channels rather than public platforms. The wealthy recognize that their network becomes their net worth, as these connections often lead to opportunities unavailable to the general public. Building a valuable network requires a different skill set than amassing followers. It demands emotional intelligence, genuine curiosity about others, and the ability to create and maintain trust over time. The wealthy invest in developing these skills just as deliberately as they invest in their financial education. They understand that a single strong relationship can generate more value than thousands of superficial connections. Real networking also involves careful curation. The wealthy are selective about their associations, understanding that time and energy are finite resources. They prioritize relationships that align with their values and goals, often stepping away from connections that don't serve their long-term vision. This selective approach ensures their network remains powerful and purposeful rather than diluted and draining. Technology still plays a role in modern networking, but the wealthy use it differently. Instead of chasing viral moments or follower counts, they leverage digital tools to maintain and deepen existing relationships. They might use private messaging apps for ongoing conversations, create exclusive online communities for their inner circle, or use social platforms to stay informed about their contacts' activities and achievements. The most successful people often belong to multiple overlapping networks, each serving different purposes. They might maintain separate circles for investment opportunities, industry insights, personal growth, and philanthropic endeavors. These diverse networks create a robust ecosystem of opportunities and support that far exceeds the value of any social media following. Lesson 5. Education over entertainment. In a world obsessed with instant gratification and endless entertainment options, the wealthy make a distinct choice that separates them from the masses. They prioritize education over entertainment. This isn't about formal degrees or traditional schooling, but rather a fundamental approach to how they spend their time and mental energy. The wealthy understand that knowledge is a compound investment that pays dividends throughout life. While others binge-watch the latest streaming series or scroll endlessly through social media, successful people are often deep in books, courses, or conversations that expand their understanding of markets, human behavior, or emerging opportunities. They recognize that every hour invested in learning creates a foundation for future wealth creation. This investment in education takes many forms. Some wealthy people spend thousands of dollars annually on specialized coaching or mentorship programs, understanding that direct access to expertise can shorten their learning curve dramatically. Others maintain rigorous reading schedules, consuming books on business, psychology, technology, and history, not just for entertainment, but with the intention of extracting actionable insights that can be applied to their wealth-building journey. The contrast becomes particularly striking when examining daily habits. Where many people default to entertainment during their downtime, the wealthy often use these moments for educational purposes. They might listen to industry-specific podcasts during their commute, attend virtual workshops during lunch breaks, or dedicate early morning hours to studying market trends. This isn't to say they never enjoy entertainment. Rather, they maintain a conscious ratio that heavily favors education. What's particularly noteworthy is how the wealthy approach learning with intention. They don't consume information randomly, but focus on knowledge that can directly impact their wealth creation ability. This might mean studying specific investment strategies, learning about new technologies that could disrupt their industry, or developing skills that increase their earning potential. They treat their mind like a garden, carefully choosing what they plant and nurture. The digital age has made this distinction even more crucial. With smartphones providing instant access to both educational content and entertainment, the choice of how to spend our attention has become more important than ever. The wealthy consistently choose learning platforms over social media, online courses over gaming apps, and educational podcasts over reality TV shows. This digital discipline compounds over time, creating an ever-widening gap between those who prioritize education and those who default to entertainment. Another key aspect is the wealthy's understanding of the relationship between education and opportunity recognition. By continuously expanding their knowledge base, they develop a keener eye for potential investments, business opportunities, and market trends. This enhanced perspective allows them to spot and capitalize on opportunities that others might miss entirely, creating a self-reinforcing cycle of wealth creation. The wealthy also recognize that education isn't just about acquiring information. It's about developing better thinking patterns and decision-making frameworks. Through consistent learning, they build mental models that help them analyze situations more effectively, make better financial choices, and avoid costly mistakes. This cognitive development becomes an invisible asset that generates returns far beyond any single piece of knowledge. It's worth noting that this approach to education extends beyond personal consumption to how the wealthy raise their children. They often instill these same values early, encouraging their children to develop strong learning habits and curiosity, while limiting purely entertainment-based activities. This generational transfer of educational priorities helps explain why wealth often persists across family lines. The education over entertainment principle represents a fundamental choice in how we invest our most precious resource, our attention. While entertainment provides temporary pleasure, education builds lasting capacity for wealth creation. The wealthy understand this trade-off intimately and consistently choose the path of learning, even when easier options are available. Their success is not just about the specific knowledge they acquire, but about the sustained commitment to personal growth and development that this choice represents. Lesson 6. Systems over selfies. In today's digital age, there's a stark contrast between those who spend their time perfecting their social media presence and those who quietly build systems that generate wealth. The wealthy understand that while personal branding has its place, the real power lies in creating scalable processes that work independently of their personal effort. Consider the difference between an influencer who must constantly create content to maintain relevance and a business owner who has automated their core operations. The influencer trades time for attention, while the system builder creates mechanisms that multiply their effectiveness. This fundamental distinction explains why many social media stars, despite their massive following, often struggle to build lasting wealth. The wealthy approach system building with methodical precision. They begin by identifying repetitive tasks in their business or investment activities. These tasks are then documented, standardized, and either automated through technology or delegated to capable team members. Each system becomes a wealth-building asset that operates whether they are actively involved or not. From automated investment platforms to customer service protocols, these systems form the backbone of sustainable wealth creation. A prime example is the contrast between a real estate agent who personally handles every showing and transaction versus one who has built a team with clear processes for lead generation, property evaluation, and closing deals. The first agent is limited by their time and energy, while the second has created a scalable business that can handle multiple transactions simultaneously. This system-based approach allows for exponential growth rather than linear expansion. Smart automation plays a crucial role in modern wealth building. The affluent leverage technology not just for efficiency, but for scalability. They implement customer relationship management systems, automated marketing funnels, and investment algorithms that work around the clock. These tools don't just save time, they create opportunities for wealth accumulation that would be impossible through manual effort alone. Documentation becomes a valuable asset in itself. The wealthy understand that well-documented systems can be replicated, sold, or scaled across multiple ventures. They create detailed operating procedures, training materials, and process maps that transform their knowledge and experience into transferable assets. This documentation allows them to expand their operations without being bottlenecked by their personal involvement. The power of systems extends beyond business operations into personal finance and investment strategies. Successful investors create systematic approaches to evaluating opportunities, managing risk, and rebalancing portfolios. These systems remove emotional decision-making and ensure consistent execution of proven strategies, regardless of market conditions or personal biases. Perhaps most importantly, systems create freedom. While those focused on image maintenance find themselves increasingly tethered to their phones and social media accounts, system builders gain more autonomy with each process they implement. This freedom allows them to focus on strategic thinking, relationship building, and identifying new opportunities for wealth creation. The wealthy also understand that systems need regular optimization. They continuously monitor, measure, and refine their processes to improve efficiency and adapt to changing conditions. This iterative approach ensures their systems remain effective and continue to generate value over time. Unlike a carefully curated social media presence, which requires constant attention to maintain relevance, well-designed systems become more valuable and efficient with each refinement. The true power of choosing systems over selfies lies in the compounding effect. Each system built becomes a foundation for future systems, creating an interconnected network of wealth-generating processes. While others chase likes and followers, the wealthy build enduring mechanisms that create value independently of their personal effort or presence. This systematic approach to wealth building represents one of the clearest distinctions between those who accumulate lasting wealth and those who merely maintain an appearance of success. Lesson 7. Time freedom over time fillers. The greatest distinction between the wealthy and the working class isn't money, it's their relationship with time. While many chase the illusion of being busy, the truly successful understand that time freedom is the ultimate wealth. They recognize that every minute spent on non-essential activities is a minute lost from building lasting wealth and living a purposeful life. The wealthy approach time as their most precious currency, understanding that unlike money, time can never be earned back. They regularly audit their schedules, ruthlessly eliminating activities that don't contribute to their goals or well-being. This might mean declining social invitations that don't align with their priorities, outsourcing tasks that others can handle, or stepping away from time-consuming obligations that don't serve their larger vision. Social media, endless news cycles, and addictive entertainment platforms have created a generation of time-poor people. These modern time fillers create an illusion of engagement while stealing countless hours that could be invested in wealth-building activities. The wealthy understand this trap and consciously limit their exposure to these digital distractions. Instead, they direct their attention to activities that compound over time, learning new skills, building businesses, nurturing valuable relationships, and creating systems that generate passive income. Time leverage is a concept the wealthy embrace wholeheartedly. They look for ways to multiply the value of each hour through delegation, automation, and strategic partnerships. This might mean hiring a virtual assistant to handle administrative tasks, investing in software that automates repetitive processes, or building teams that can execute their vision while they focus on high-level strategy. They understand that working harder isn't the answer. Working smarter through leverage is the key to time freedom. The wealthy also practice what might seem counterintuitive to others. They schedule downtime. This isn't about being lazy, it's about creating space for strategic thinking, creativity, and regeneration. They recognize that constant activity doesn't equal productivity, and some of their best ideas and opportunities come during periods of intentional rest. This scheduled downtime allows them to maintain clarity, make better decisions, and avoid the burnout that plagues many ambitious professionals. Another crucial aspect of time freedom is the ability to say no without guilt. The wealthy have learned that every yes to a non-essential commitment is a no to something potentially more valuable. They develop clear criteria for how they spend their time and aren't afraid to decline opportunities that don't meet these standards. This selectivity allows them to maintain focus on their most important goals and prevents the scattered approach to time management that keeps many people stuck in mediocrity. The wealthy also understand the power of morning routines and protect their peak energy hours fiercely. Rather than beginning their days responding to others' demands through emails and messages, they dedicate their most productive hours to their most important work. They recognize that how they start their day often determines its quality, and they refuse to let external pressures dictate their schedule. Building time freedom requires a fundamental shift in thinking about productivity. While the masses measure their days by hours worked, the wealthy measure theirs by value created. They focus on outcomes rather than activity, understanding that being busy is different from being productive. This mindset allows them to break free from the traditional time-for-money trap and create wealth through leverage and strategic time investment. This shift in relationship with time doesn't happen overnight. It requires conscious effort to break old habits, establish boundaries, and resist the cultural pressure to fill every moment with activity. But those who master this principle find themselves with not just more wealth, but also more life satisfaction and the ability to pursue opportunities that others can't because they're too trapped in the cycle of busyness. Lesson 8. Health over hype. The wealthy understand a fundamental truth that many overlook. Your health is your primary asset. While social media floods us with quick-fix solutions and trending wellness fads, those who build lasting wealth take a dramatically different approach to their physical and mental well-being. They view health as a long-term investment that compounds over time, much like their financial portfolios. Rich people recognize that medical expenses can devastate wealth faster than almost any other factor. This awareness drives them to invest heavily in preventative care, regular checkups, and early intervention strategies. They don't wait for problems to emerge, they actively work to prevent them. This approach extends beyond just physical health to encompass mental wellness, stress management, and emotional resilience, all crucial elements for sustained success in wealth building. The wealthy also understand the intimate connection between health and productivity. When your body and mind function optimally, you make better decisions, maintain higher energy levels, and can work more effectively toward your goals. This isn't about running marathons or achieving perfect fitness. It's about maintaining a level of health that allows you to perform at your best in all areas of life. The rich invest in quality sleep, proper nutrition, and regular exercise, not as luxury items, but as essential components of their wealth-building strategy. What's particularly noteworthy is how the wealthy approach health investments. They don't chase the latest fitness trends or fall for marketing hype around miracle supplements. Instead, they build sustainable systems that support long-term health. This might include having a personal chef to ensure proper nutrition, maintaining a home gym for convenient exercise, or working with health professionals who provide personalized care and guidance. These aren't extravagant luxuries. They're strategic investments in maintaining their most valuable asset. The wealthy also recognize that health extends beyond physical wellness. Mental health plays a crucial role in decision-making, risk assessment, and stress management, all vital skills for wealth preservation and growth. They invest in therapy, meditation practices, and stress reduction techniques, not because it's trendy, but because they understand the real cost of burnout and mental fatigue on their wealth-building capacity. Another aspect often overlooked is how the wealthy view time in relation to health. They understand that taking time for exercise, proper meals, and adequate rest isn't a luxury, it's a necessity. While others might skip workout sessions or cut sleep short to hustle harder, the truly wealthy recognize that this approach is counterproductive. They know that sacrificing health for short-term gains often leads to long-term losses, both in terms of wealth and well-being. The wealthy also invest in their environment to support their health goals. This might mean creating a home that promotes good sleep hygiene, maintaining spaces for physical activity, or ensuring access to healthy food options. They understand that their immediate environment significantly impacts their health choices and make adjustments accordingly. This systematic approach to health creates a foundation that supports their other wealth-building activities. Perhaps most importantly, the wealthy view health as a form of insurance for their future. They understand that their ability to enjoy and manage their wealth depends largely on their physical and mental condition. This long-term perspective guides their health investments and decisions. While others might be swayed by quick fixes and temporary solutions, the wealthy focus on building sustainable health practices that will serve them well into their later years. By prioritizing health over hype, the wealthy create a robust foundation for their success. They understand that no amount of wealth can compensate for poor health, and that maintaining good health is itself a form of wealth. This investment in good health pays dividends not just in longevity and quality of life, but in their capacity to build and maintain wealth over the long term. Lesson 9. Silence over showing off. In a world of constant noise and digital showmanship, the wealthy have discovered an unexpected asset: silence. While social media feeds overflow with displays of consumption and carefully curated moments, those building real wealth often operate in quiet dedication to their craft and investments. This strategic silence isn't just about being private, it's about creating space for clear thinking, careful planning, and focused execution. The wealthy understand that broadcasting your moves often diminishes their effectiveness. When you're constantly sharing your goals, strategies, and achievements, you're not only giving away your competitive advantage, but also diluting your mental energy. There's a psychological cost to maintaining a public persona, one that takes away from the concentration needed to build and manage wealth effectively. Consider the phenomenon of stealth wealth, people with substantial net worth who deliberately maintain modest appearances and quiet lifestyles. These people aren't driven by the need for external validation or social proof of their success. Instead, they channel their energy into activities that compound their wealth, researching investment opportunities, nurturing business relationships, and making calculated decisions about their assets. This approach to wealth building stands in stark contrast to the fake-it-till-you-make-it mentality that pervades social media. The latter often leads to destructive financial behaviors, where people sacrifice their actual financial health for the appearance of success. The wealthy recognize that every dollar spent on maintaining appearances is a dollar that could be invested in appreciating assets or revenue-generating ventures. The power of silence extends beyond just financial discretion. It creates a mental environment conducive to better decision-making. In moments of quiet reflection, away from the chaos of social media and public opinion, wealthy people can better assess opportunities, risks, and long-term strategies. This mental clarity becomes increasingly valuable as wealth grows and financial decisions become more complex. Moreover, silence serves as a protective mechanism. The wealthy know that attention can attract unnecessary complications, from frivolous lawsuits to constant solicitations for investments or donations. By maintaining a lower profile, they can operate more effectively and protect their assets from both opportunists and unnecessary risks. The practice of strategic silence also builds stronger professional relationships. Instead of broadcasting their success, wealthy people often prefer to let their results speak for themselves. This approach earns them respect in their industries and creates more meaningful connections based on actual value rather than perceived status. The digital age has made silence even more valuable. While others chase likes and shares, the wealthy focus on building real equity. They understand that true wealth often grows best in the shade, away from the glare of public attention. This doesn't mean they're completely absent from social platforms or public life. Rather, they're selective about what they share and when they share it. Consider the example of successful private investors who rarely discuss their strategies publicly. While investment influencers broadcast their every move on social media, these quiet professionals consistently outperform through careful analysis and patient execution. Their silence isn't about secrecy. It's about maintaining the mental space needed for effective wealth management. The practice of strategic silence also extends to consumption patterns. While others feel compelled to document every purchase or experience, the wealthy often enjoy their success privately. This isn't about hiding their wealth. It's about understanding that true luxury lies in the freedom to enjoy life on one's own terms, without the need for public validation. This approach to wealth building represents a fundamental shift from showing off to showing up, focusing energy on actions that create real value rather than perceived value. In the end, the wealthy know that silence isn't just about what you don't say, it's about creating the space needed for wealth to grow naturally and sustainably. Lesson 10. Compound growth over quick gain. The allure of overnight success stories and get-rich-quick schemes has never been stronger than in our current digital age. Social media feeds are filled with cryptocurrency millionaires, day trading gurus, and viral sensations who seemingly struck gold overnight. Yet the wealthy understand a fundamental truth that has remained constant throughout history. Sustainable wealth is built through the patient power of compound growth. The mathematics of compounding represents one of the most powerful forces in wealth creation, yet it remains underappreciated by those seeking immediate results. When Warren Buffett was asked about his wealth, he noted that about 99% of it came after his 50th birthday, not because he suddenly became smarter, but because the compounding of his earlier investments reached critical mass. This phenomenon applies not just to financial investments, but to knowledge, relationships, and business building as well. The wealthy approach compound growth with an almost religious devotion. They understand that small, consistent actions, when maintained over time, create exponential results that far surpass any short-term gains. A 1% improvement each day results in a 37x improvement over a year. This principle guides their decision-making in everything from business reinvestment to skill development. They are willing to accept slower initial progress because they understand the backloaded nature of exponential growth. What makes compound growth particularly powerful is its ability to work across multiple dimensions simultaneously. While money compounds in investments, knowledge compounds through application, relationships deepen through consistent nurturing, and business systems become more efficient through iteration. The wealthy create situations where multiple forms of compound growth work in concert, creating a symphony of exponential returns that accelerate over time. This multidimensional compounding explains why the truly wealthy often appear to generate results effortlessly. What observers don't see are the years or decades of consistent investment in themselves, their businesses, their relationships, and their assets. They've created an ecosystem where growth builds upon growth, generating momentum that becomes increasingly difficult for competitors to match. The wealthy also understand that compound growth requires protection from disruption. They know that breaking the chain of compounding, whether through inconsistency, poor risk management, or chasing short-term opportunities, can set them back years or decades. This explains their often conservative approach to preservation of capital and their focus on sustainable, repeatable processes rather than one-time wins. Perhaps most importantly, the wealthy recognize that compound growth requires the right psychological framework. They've developed the patience to allow their investments to mature, the discipline to maintain consistent habits, and the fortitude to resist the temptation of quick but unsustainable gains. They understand that the biggest enemy of compound growth isn't market conditions or competition. It's their own potential for self-sabotage through impatience or greed. This long-term orientation influences how the wealthy structure their lives and businesses. They create environments that support sustained effort over time, rather than burning out in pursuit of immediate results. They build teams that can maintain momentum over years rather than months. They design business models that can compound customer value and market share rather than simply maximizing short-term profits. The power of compound growth extends beyond purely financial considerations. The wealthy apply this principle to their personal development, understanding that small daily improvements in health, relationships, and knowledge compound over time to create extraordinary outcomes. They recognize that the habits and systems they build today will determine their results decades into the future, and they act accordingly. In a world increasingly oriented toward immediate gratification, the wealthy maintain their focus on compound growth with an almost contrarian dedication. They know that while others chase quick gains and temporary victories, the real power lies in consistent application of proven principles over time. This patience and persistence, more than any particular strategy or tactic, defines their approach to building and maintaining wealth. Lesson 11. Cash flow over clout. The modern obsession with social influence has created a dangerous illusion where appearing wealthy has superseded actually building wealth. While millions chase digital popularity and social proof, the truly wealthy focus on something far more substantial: consistent cash flow. This fundamental difference in priority shapes not just financial outcomes, but entire life trajectories. Cash flow represents the lifeblood of wealth building, providing the oxygen that keeps financial independence alive and thriving. It's the regular, predictable income streams that grant true freedom and security, not the temporary dopamine hits from social validation. The wealthy understand that sustainable wealth comes from assets that generate money while they sleep, not from cultivating an image that requires constant maintenance and validation from others. Consider the stark contrast between someone who invests in rental properties generating monthly income versus someone investing the same amount in designer clothes and luxury items to maintain an influencer persona. The property owner builds equity, receives tax advantages, and creates ongoing passive income. The influencer, meanwhile, faces diminishing returns, constant pressure to upgrade their lifestyle, and the exhausting chase for relevance in an increasingly crowded digital space. The wealthy also recognize that strong cash flow provides optionality, the ability to say yes to opportunities and no to obligations. When you have reliable income streams from multiple sources, you gain the power to make decisions based on long-term value rather than short-term necessity. This optionality becomes a compound advantage, allowing for strategic investments and calculated risks that can accelerate wealth building even further. Many mistake popularity for prosperity, but clout rarely converts to cash flow. The social media landscape is littered with influencers who appear successful but lack the fundamental financial foundation that generates lasting wealth. They trade their time and authenticity for likes and followers, missing the crucial understanding that attention without monetization is simply expensive entertainment. The truly wealthy often operate with remarkable privacy, focusing their energy on building and maintaining income-producing assets rather than crafting a public image. They understand that cash flow speaks louder than clout, and financial independence whispers while wealth theater shouts. This quiet approach to wealth building allows them to make decisions based on numbers rather than notifications, on profit rather than popularity. Cash flow also provides resilience during economic downturns. While social capital can evaporate overnight with changing trends or platform algorithms, well-structured cash flow streams tend to weather economic storms. The wealthy build diversified income sources from business operations, real estate, investments, and intellectual property, creating a robust financial ecosystem that thrives regardless of social trends or market conditions. The pursuit of clout often leads to lifestyle inflation and financial vulnerability. The pressure to maintain appearances drives spending on depreciating assets and experiences that drain rather than build wealth. Meanwhile, those focused on cash flow continuously reinvest in assets that appreciate and generate additional income, creating a powerful cycle of wealth accumulation. Understanding this distinction requires a fundamental shift in perspective. Instead of asking, "How will this make me look?" the wealthy ask, "How will this make me money?" This simple reframe guides decision-making toward activities and investments that strengthen financial foundations rather than social facades. It's about prioritizing substance over signal, results over recognition, and sustainable growth over superficial gains. The path to lasting wealth rarely trends on social media. It's built through methodical focus on creating and optimizing cash flow streams, understanding that financial freedom comes from what you own, not what you show. While others chase clout, the wealthy quietly build empires of income-producing assets, knowing that true power lies not in being seen, but in being sustainable. Lesson 12. Ownership over opinion. The wealthy understand a fundamental truth that eludes many. Ownership creates freedom, while chasing opinions creates chains. In a world obsessed with likes, comments, and viral moments, the truly prosperous focus on acquiring assets that generate value regardless of public perception. Consider how many people spend their energy managing their image on social media, carefully curating posts and obsessing over engagement metrics. While they're caught in this endless cycle of seeking approval, the wealthy quietly accumulate ownership stakes in businesses, properties, and intellectual property. They recognize that controlling productive assets matters infinitely more than controlling the narrative about themselves. This ownership mindset extends beyond traditional assets. The wealthy seek to own their time by building systems that work for them. They own their decisions by developing strong personal convictions rather than swaying with popular sentiment. They own their expertise by investing in deep knowledge rather than surface-level understanding. This comprehensive approach to ownership creates a foundation of strength that no amount of favorable public opinion can match. The contrast becomes particularly stark when examining how different groups handle criticism. Those focused on opinions often find themselves paralyzed by negative feedback, constantly adjusting their actions to maintain approval. The ownership-minded, however, understand that criticism is irrelevant when you're building something of genuine value. They evaluate feedback based on its merit rather than its source, and they remain steadfast in their conviction to build and own rather than please and perform. This principle manifests clearly in business decisions. While many entrepreneurs chase trending markets based on public sentiment, the wealthy focus on owning market share in stable, profitable niches. They prefer majority stakes in small, profitable companies over minority positions in glamorous startups. They understand that controlling interest in a boring business that generates consistent cash flow trumps being a small player in an exciting but uncertain venture. The ownership mindset also influences how the wealthy approach personal development. Instead of consuming endless content about success, they focus on owning skills and capabilities that create tangible value. They build proprietary systems, develop unique insights, and create intellectual property that they fully control. This approach generates lasting value that persists regardless of market conditions or public sentiment. Real estate provides another clear example of this principle in action. While many debate the merits of various markets or obsess over design trends, the wealthy focus on securing ownership of properties in strategic locations. They understand that controlling physical assets provides leverage and opportunities that no amount of market commentary can match. They own the asset, control its use, and benefit from its appreciation, all while others merely discuss and debate. The digital age has created new opportunities for ownership that the wealthy actively pursue. They secure digital assets, domains, and intellectual property rights, while others chase follower counts and engagement metrics. They understand that owning digital real estate and content platforms provides more sustainable value than building a presence on platforms owned by others. Perhaps most importantly, the wealthy own their financial destiny through multiple income streams and diversified assets. They don't rely on popular investment trends or hot stock tips. Instead, they build portfolios of owned assets that generate value independently of market sentiment or public opinion. This ownership-based approach to wealth creation provides a level of security and control that no amount of positive public perception can match. The path to lasting wealth requires shifting focus from managing opinions to accumulating ownership. It means choosing the quiet satisfaction of building equity over the fleeting thrill of public approval. When you own assets that generate value, the opinions of others become increasingly irrelevant to your financial success. The wealthy understand this profound truth. True freedom comes not from being liked, but from owning assets that work for you, regardless of what anyone thinks.